All right, let's talk about the new corporate tax in the UAE. If you run a business, this is a huge deal. In this guide, we're going to break down everything you need to know for your 2025 filing. We're going to demystify the whole process so you can get it done with confidence. So, let's just cut to the chase. The big question is, are you ready? Because, whether you're running a mainland company, a free zone business, or you're a high-earning freelancer, this new system is almost certainly going to affect you. And being prepared is really the only way to avoid some pretty costly mistakes. So here's what we're going to cover today. We'll figure out if you even need to file, we'll nail down your deadline, get your filing toolkit together, and then I'll walk you through the entire process, step by step. We'll also look at the penalties, the high cost of getting it wrong, and finish up with the key takeaways for success. Okay, first things first. The most fundamental question: do you actually need to file a return? It's really easy to make assumptions here, but honestly, the answer is way broader than most people think. The net is cast incredibly wide here. It covers all mainland companies, period, no exceptions. But here's the part that really trips people up. It also includes most free zone companies, even if you qualify for 0% tax rate. Let me say that again. You might owe 0, but you are still legally required to file that return. And the same thing goes for individuals and freelancers who are bringing in some serious business income. And for all you freelancers and sole proprietors out there, this is the magic number to remember. If your annual business income tops 1 million dirhams, you're officially in the system. You have to register, and you have to file a corporate tax return. It's a really critical threshold you've got to have on your radar. Okay, so you've figured out if you need to file. The next massive piece of the puzzle is when. Timing is everything with taxes. And trust me, missing your deadline comes with a very steep price. The rule of thumb here is pretty simple, actually. You've got 9 months from the end of your company's financial year to file your return. So for most businesses on a standard calendar year that ends December 31st, 2024, your final drop-dead deadline is September 30th, 2025. Seriously, put that date in your calendar right now. All right, we've got the who and the when sorted. Now, let's get practical and talk about the what. It's time to assemble your filing toolkit. These are the documents you will absolutely need to have on hand. Okay, think of this as your pre-flight checklist for filing. You're going to need your trade license and, this is a big one, audited financial statements. These are absolutely vital if you're a free zone entity trying to claim that 0% rate. You'll also need any details on tax adjustments, good records of any income that's exempt, and if it applies to you, your transfer pricing documents. That's basically the proof that shows any deals between your related companies were priced fairly, at arm's length. With all your documents gathered, you're ready to actually tackle the filing itself. So let's walk through exactly how it works on the official EmaraTax portal. And just a quick heads up, this is super important. Forget about paper forms. This whole thing is 100% digital. Everything, from the submission to the payment. All of it happens on one single platform, the Federal Tax Authority's EmaraTax portal. The portal guides you through 6 pretty straightforward steps. You're going to log in, select your business, punch in the key numbers from your financial statements, and then upload those documents we just talked about. The portal then does the heavy lifting and calculates your tax for you. After a final review, you hit submit, and then you pay whatever tax is due. It really is designed to be a guided process. Now, that calculation step is where you really need to pay attention. It's all about this 2-tier system. The first 375,000 dirhams of your taxable profit, it's taxed at 0%. Yep, you heard that right, 0. It's only the profit that comes in above that amount that gets hit with the 9% rate. So following all these steps is, obviously important. But why is it so critical? Well, because making a mistake or just being late can be seriously expensive. Let's take a look at the high cost of errors. And listen, these penalties are no joke. Just being late to register will cost you 500 dirhams a month. But the real shocker is for late filing. That's a 10,000 dirham penalty right off the bat. And if you make any mistakes on the return itself, that can trigger even more fines. The message is crystal clear. Compliance is not optional. Okay, so with those scary numbers in mind, let's bring it all home. Let's boil all this down into your final compliance checklist, the key things you need to do to stay on the right side of the law. Let me give you 4 pro tips for success. First, Always reconcile your books before you even think about logging into the portal. Second, you have to keep all your financial records for at least 5 years, because the FTA can ask for them at any time. Third, and this is crucial, if you're a free zone company claiming that 0% rate as a qualifying free zone person, audited accounts are completely non-negotiable. And finally, look, if this all feels overwhelming, just hire a professional tax agent. The cost of good advice is almost always way less than the cost of a single mistake. The new corporate tax system is a reality. It's here. The rules are set, and as we've seen, compliance is a choice with some very real consequences. The only question left is, are you prepared to make the right one?